Finance Minister. Nothing more than that. Do you want to go to the lecture?
Yeah.
Okay.
Wherever you.
Thanks. Good morning, ladies and gentlemen. It's a great pleasure to be in Edinburgh and in your midst. Well, let's try to connect through sharing some fears and anxieties that keep us all up at night. You heard that Mario Draghi yesterday indulged in a little bit more of innovation. He announced a rather interesting concept. The Central Bank of Europe will be auctioning off wads of money, and banks will be able to bid for them. And if they are successful in bidding, then they will be paid by the central bank a fee in order to lend money to the private sector. What's going on? Has money gone bad? Is money a bad thing? This is not an ethical question. This is a purely economic question, because if something acquires a negative price, it means we want to get rid of it. We are paying people to take it off our hands, so it must be bad. Well, of course, money is not a bad thing, and capital can't possibly have a negative return if you imagine of capital as a commodity. But it is a mistake to imagine of capital funding as a commodity. The fact that today about 200 billion euros of German government debt yields negative rates, the fact that in Spain, in which the proportion of non-performing mortgages is at a historical high, Spanish banks have to peg their mortgage rates to a Euribor one-year rate, which is less than zero, and therefore they are destroyed if they lend money. That all simply informs us that there is something rotten in our financial kingdom. And what is rotten, of course, is that we live in deflationary times. Deflationary times, for those of us who grew up in inflationary times, are very difficult to fathom. But we should try, because unless we grasp what is going on and the causes of what is going on, there is no way that we can exert pressure on our authorities, our governments, our central banks, to move beyond the state of denial in which they find themselves. I was reading some time ago, and I like to quote that, the autobiography of Niels Bohr, the famous quantum mechanicist. And in it, he tells a story of a summer day when he was visited by another famous physicist in his country home in Norway. Upon his arrival, his friend noticed that there was a horseshoe pinned above the door. And he turned around to Niels and said, "Niels, I never believed that you would be believing that this might ward off evil spirits." And Niels Bohr turned around and said, "No, of course I don't believe in it, but my housekeeper tells me that it works even if you don't believe in it." This is Mario Draghi yesterday. He doesn't think it's going to work, but he hopes it will work even though he doesn't believe in it. This is Christine Lagarde of the IMF, the Eurogroup, indeed George Osborne here, the Bank of England. We are in a mire. Now, if we need to understand it's not difficult to understand why we are in this mire if we put our mind to it. Let me make a simple quantitative point. In Britain, last time I looked, there was about 700 billion pounds of idle savings. Savings slushing around in the financial sector, not invested in productive activities. That's data for the last quarter. That is a lot of money doing nothing. It's not that it's not doing anything, but what it does is not particularly helpful. It's being lent to to other corporations that use it, usually in order to buy back their own shares. That boosts share prices. This is good for bonuses, but it doesn't do anything for investment demand in actual investment in real economic activities. It has been lent out, or at least very recently, until the bottom began to fall out of the London market, in order to bid house prices up. Again, utterly useless from an economic growth point of view. In Europe as a whole, we have about 2.1 trillion euros slashing around idly. Between the United States, Britain, and Europe, we have 4.5 trillion. That is creating what I call the twin peaks problem. One peak you all know. It's the peak, the mountain of debts and banking losses and various losses that has been casting a very long shadow upon us since 2008, at least. But the second peak, which is hidden behind it, very few people are familiar with. It's this mountain of idle savings, which is equally tall, and which is refusing to be invested in productive activities that are necessary in order to produce the incomes that are necessary in order to extinguish the first peak of debt and losses. This is the problem. How do you activate the idle savings in order to generate the incomes that will stop you from having sleepless nights and which will push growth rates and interest rates up? So, if put simply, the twin peaks problem leads to a symptom. And the symptom is that at the moment, look at it from an pure economic point of view, there exists no interest rate that can simultaneously bring investment up to the level of savings and at the same time not destroy pension funds and generally the financial system. There is no such number. If you were a central banker and you had to choose a number, I mean, once upon a time, we used to think that there was an optimal interest rate, a market clearing interest rate, which simultaneously stabilizes the financial sector and equilibrates savings and investment. At the moment, the problem we are facing is that such a number does not exist. It's not mathematically defined. If you think of it in terms of a system of equations, you solve them, you don't get a solution. And our sleepless nights, from a political point of view, from people like me who worry about the disintegration of the European Union, the walls that are being built around Europe, the fences that are turning one proud nation against the other, the bickering between Greece and Germany, between Italy and Germany, everybody hating the French at the same time, which is usual. These are my worries as a politician and as a citizen. But these worries have exactly the same source as your worries. Now, sometimes it's useful, especially in a context like this, to take a step backwards and start thinking in terms of what was the historical process that led us to where we are. Sometimes history illuminates our present worries. So allow me a very brief historical account of why we are where we are. You will recall a very similar moment, unfortunately, to the one we're facing now in the late 1920s, early 1930s. The world emerged from the Great War and, in its infinite wisdom, created the gold standard, effectively a fixed exchange rate system. Now, when you bind together disparate economies by means of a fixed exchange rate system, immediately you cause a tsunami of capital to flow from the surplus parts to the deficit parts. Why? Because if it is credible, if people believe that the exchange rate will be fixed, then in countries that have a current account surplus, which also have a surplus of idle cash because of the current account, every time BMW sells a BMW to Portugal, a BMW goes to Portugal from Bavaria, and a wall of money comes to Frankfurt Bank. That creates an oversupply of money, of funds in Frankfurt, that pushes interest rates, actual interest rates in Frankfurt lower than they are in Portugal. Immediately, Deutsche Bank wants to take this money and find somebody to lend it to in Portugal. So a tsunami of capital starts from the surplus to the deficit regions. The more credible the fixed exchange rate system is, the greater this tsunami, the greater the bubbles that are being inflated in the deficit regions. And when something, whether it's Lehman Brothers or whatever, pricks that bubble and the bubble bursts, then you have the burden of adjustment falling on the weakest of shoulders, the shoulders of the deficit country that cannot afford, well, they don't have the strength to bear that burden. And when you try to solve this problem through internal devaluation in that part of the world, like France did in the early 1930s, then its economy is crashed, and then very soon you have deflationary forces flooding the core, the surplus countries. And then negative interest rates ensue, and negative growth rates ensue. We've seen all this before. Every time we've tried to fix exchange rates, this is what happened. It happened in the 1920s and 30s. It happened in Latin America with the pegs of the peso, various pesos with the dollar. It happened here in Europe with the Eurocrats. Why do you think Greece is a basket case? Because we had the largest, strongest growth rate together with Ireland between 1998 and 2008. Poor Germany was only growing at 1.5%. Greece, 5.5%. It was all Ponzi growth, of course, based on this tsunami, this flood of capital. And again, just like after 1929, our generation's 1929, which was in 2008, witnessed what? This process, where the bubbles burst, the capital flows are reversed massively, the common currency is fragmenting. In the 20s and 30s, it was the gold standard. Now it's the euro. And very soon after that, proud nations turn against one another. So we're reliving this moment. And you can see now the refugee crisis should not be a crisis. Europe is rich enough to be able to deal with it in a humane way. The reason why we're making such a mess of it is because the foundations of the European Union have been undermined by an economic crisis which was due to the fact that we took the gold standard that had failed in the 1920s and 30s and implanted it in Europe in the 1990s and 2000s. It's very simple. And the trouble with Britain, and I would like to make a plea, I always make a plea when I'm in this country, stop thinking of the European Union as a given. The problem with both sides of the Brexit debate is that all of you, well, not you personally, but you know what I mean, both sides of this political debate in Europe are assuming that Europe is a constant on the other side of the British Channel, and the question is whether you are better off in it or out. That is not the issue. The European Union is disintegrating, ladies and gentlemen, as we speak. My problem with Brexit is that it would speed up the disintegration. And that disintegration will cause a vortex in the heart of the continent from which Britain cannot escape, whether it's in or out. That's my two-penny worth regarding the referendum. Let me go back to my story. So we created the gold standard in the middle of Europe, and in precisely the same way that the gold standard fragmented and imploded, this is what has happened here. There was an occasion in global economic history when we created a fixed exchange rate that did not suffer from this problem. It was called the Bretton Woods system, the golden age of capitalism. 1944 to 1971, precisely the 15th of August, when the Nixon shock destroyed the Bretton Woods system. Now, the difference between Bretton Woods and the gold standard and the euro is that the Americans who created it, because John Maynard Keynes made some wonderful speeches at Bretton Woods, but he was completely and utterly ignored by Mr. White, the representative of President Roosevelt. Where Keynes and White agreed was that to prevent the problems of a fixed exchange rate regime that the gold standard had, that the euro has, you need to have a combination of fixed exchange rates or controlled exchange rates with what I call a global surplus recycling mechanism, which simulates what a state would be doing. The Marshall Plan was part of that. The Americans dollarized Europe so as to preserve their capacity to be a surplus country through net exports to Europe. It's very simple. There was no philanthropy in this. Mind you, it was hugely important, not only because it provided us with the golden age of capitalism, but also because it gave rise to the European Union. The European Union, Europeans like to think, is a great creation of Europeanists. It's not. It's a design by the United States of America, which was implemented by the New Dealers in the late 1940s and throughout the 1950s. That doesn't make me very popular to say in Europe, especially in Paris. Or Brussels, for that matter, which I try to avoid, like the plague. Now, what do we do? No one understands or believes more fiercely that the euro was a very bad idea than I do. And yet, I am not driven to the conclusion that we should do away with it. I believe in the Hotel California dictum that you can check out anytime you like, but you can never leave. Or you can't leave without catastrophic consequences. In the 1990s, I was campaigning against my country entering the Eurozone. I was actually indeed campaigning against any country entering the Eurozone. This is why I'm great friends with unlikely political allies like Lord Lamont and Howard. But consider this. Suppose we now disintegrate the euro. Say, it was a bad idea, let's do away with it. What will happen? There's going to be a huge fault line down the Rhine and across the Alps. Germany, Holland, definitely Austria, Finland, the Baltics, with a very high probability, Hungary, the Czech Republic, and Poland will join in a new Deutschmark zone. This new currency, whatever they choose to call it, is going to appreciate. They will have exactly the same problems that Switzerland has. And a very large number of people who are now working at very low wages, mini jobs in Germany and elsewhere, in that part of the world, are going to be turned into unemployed former workers. This is a terrible development for Europe, especially when on the other side of the divide, of the fault line, what you're going to end up with is a stagflationary Latin Union, or disunion for that matter, with high inflation and high unemployment. Does Britain want to live in that environment? You cannot escape that. No one can escape this postmodern version of the 1930s. So what do we do? How can we fix this terrible design, which is a fundamental reason why Britain is languishing today in an environment, financial environment of financial depression, of negative interest rates, of pension funds that are struggling for yield? What could we do instead of what we're doing? What would I have liked to have seen Mario Draghi do yesterday instead of this, Niels Bohr-like act of faith? Well, imagine that if instead of that announcement we had the following one. The European Union Council has given the green light to the European Investment Bank to embark upon an investment-led recovery program for the Eurozone, indeed for the whole of the European Union, with a degree of funding for a program of investing into startups, into green technology companies, into the slip of the tongue, you see, the Green Energy Union. And how will this be funded? It will be funded by the EIB issuing its own bonds, without any co-financing from the bankrupt states of the Eurozone. Now, why doesn't the EIB do that today? They don't do it because, firstly, they need a green line from the European Union Council, and secondly, because they're very good conservative bankers who fear that if they issue all these bonds, their yields will go up. Well, if Mario Draghi was to announce yesterday that he is going to be standing by in the secondary markets, ready to buy those EIB bonds to ensure that their yields do not go above 0.5, 1%, then suddenly we would have a Green New Deal for Europe. And note the two profound differences with what is going on now. First, that would be legal. What Draghi is now doing is illegal. And he's really pissing off, excuse my French, Jens Weidmann, the head of the Bundesbank. And an angry Bundesbank is a very bad ally to have in Europe. Why is Jens Weidmann annoyed by this, by QE? Because it violates the letter and the spirit of the Charter of the ECB, which very clearly states that the ECB should not be financing states. It should not be buying Italian or French or Spanish or indeed German bonds. Now, there's no doubt that this rule is silly, but try to convince the Bundesbank that the rule should not be respected because it is silly. It's not an easy conversation to have. The second and more important reason why my announcement would be better, I think would be more efficient in actually getting things working again in Europe, pushing investment up to savings, is because this would be quantitative easing that goes straight into investment bonds of a large, macroeconomically significant investment bank. The European Investment Bank is 3 times the size of the World Bank. I'm sure you know that. And it will be much larger under this policy. And this funding would go directly into productive activities that would push up the level of investment in order to end the Twin Peaks paradox, which is the reason why you can't sleep at night. This is just an example of things we could do today, not to wait for a second coming, but which we're not doing. And why are we not doing them? There's no technical reason. It's purely political. And I'll finish with a story, which I experienced last year. I lived through it. I do not even wish it to my worst enemy to live such a conversation. It was February 2015. I was speaking with a top-notch official of the International Monetary Fund. We had a 5-6 hour negotiation on the Greek government program, which of course is a completely failed program. We lost almost a third of our nominal GDP as a result of it. And she said this to me, oops. She said, Yanis, don't carry on trying to convince me that the Greek program can't work. I know it can't work. But you must understand that we have expended a great deal of political capital. We have invested so much political capital in this program. So your credibility, my credibility, depends on accepting it. Need I say more? Did you get this? This is a failed program. It can't work. Your country will be crushed further by deflation. But we have put so much political capital in it that you are going to be non-credible, and you'll be chastised as non-credible if you don't accept it. This is what we need to change in Europe. And this is not just for the continentals. We made a mess by creating the Eurozone. Britain made a very wise decision to stay out. But you are not disconnected from it. By voting to get out, you will give Brussels a bloody nose, and I will be very pleased to see that bloody nose emerge. But you are not escaping the vortex that the disintegration of the European Union is creating. And I believe that we should all stay together and try to do something really very simple. Democratize the European Union, because as Churchill said, it's a terrible system, democracy, but it's the best shot we have at injecting a little bit of rationality in European economics and politics. Thank you.